Hi everyone, welcome back to the channel. Now, in this month's analysis, I am going to walk through another really high level broader market overview. I will be spending around 5 minutes just walking through all of the key major indexes and data points. And as always, I've got around 20 individual stock ideas for your watch lists going into next month. Now, it has taken around 20 hours to prepare, present, edit and upload, so I do hope that you find a lot of value from my hard work. If you follow me closely on X, hopefully I've helped you to buy the dip after the recent mini correction that we all had to deal with. But before I get into the charts, for disclosure, myself or my clients may hold positions in some of the names mentioned, but I have highlighted disclosures on the charts. I think most of you know by now that I don't use any magical hindsight indicators. I do timestamp absolutely everything, which is massively important. I'm one of the very few who go on the record with their work. Just to clarify, I'm neither a perma bull or a perma bear. I simply just analyse the data as it comes in and draw logical conclusions. But I just ask you to please pause the video, make sure you are comfortable with that really important disclaimer before we get going. And as always, please do smash the like button. It really does help with the YouTube algorithms and really does help to get my work a lot more noticed. But where I just want to quickly start, we are at month end for January now. I am recording this just a few hours before the end of Friday's session. I don't really anticipate the numbers changing a massive amount, but I think what I just like to point to everybody's attention, and I'm sure we've all noticed it, is over the last few weeks the market has absolutely ripped and rallied to the upside now. Let's take out the DeepSeek shenanigans from last week, which I'm sure has probably affected most of us at some point, especially if you've owned Nvidia like I do. But the NYSE composite, the Dow, the S&P, small caps have caught a bid over the last few weeks. I'll get into why that is in a few minutes. But the market at the moment is really just screaming risk on at the moment. But I think it's not just the US markets. We're seeing the same thing across China, Germany, boring old Germany, European financials, etc. are already up 9%. For the year so far. That's an annual return pretty much in to kick the year off. But I know for a lot of folks looking at the crypto markets as a risk on gauge of sentiment. We're seeing Solana, Bitcoin, Ethereum, etc. But the two data points that I think probably escapes a lot of folks, especially if you're a retail investor, retail trader, etc., is dollar down. The thesis and the charts for the last couple of years, there's a really inverse correlation between the dollar and the US markets. And when the US dollar is going down, stocks are going up. So what we've seen to kick the year off is actually just a continuation of what we've seen over the last few years. I think most of you already know, especially if you follow me really closely, and you know, I wish I had more time to do more of these videos. My client base is massive now. I just don't have the time to get into this every week, unfortunately. So I'm only able to upload usually once every month or two. But my longer term chart for the S&P 500 just hasn't changed. I've been banging the drum on this, that rather than second guessing, little 1 or 2, 3% pullbacks in the market, I prefer to use longer term charts with risk on, risk off signals. The 10-month moving average is a really good risk on, risk off signal. If you use it, you would have bypassed the dot-com bubble, the financial crisis, sideways market, which was very, very choppy. Obviously, we had V-shaped recoveries for COVID, etc. But generally speaking, when we go below a declining 10-month moving average, that's a better signal in my view than a lot of the economic data that I'm sure many of you pay attention to. It's why I prefer technical analysis. I am obviously fully immersed in the whole financial markets. I pay attention to everything, but I do find charts to just be a little bit more useful from a risk management perspective. So for me, my longer term chart has not changed for the last 18 months. 6,700 is still my upside objective. These are Fibonacci extension levels, because the market is telling me that historically these levels have mattered. So I don't see the point in changing my outlook at the moment. The shorter term S&P 500 chart, it does look like we are potentially basing and getting ready to potentially break out again. There is a little bit of an expansion now in the 6-month highs list. Again, if you pay attention to me on X, you'll know that I have a little bit of fun with all the market breadth gurus, because and a lot of the CMTs who just get super bearish as soon as there's a deterioration of breadth. But the way that I look at things is the exact opposite of that. When we have a deterioration of breadth, deterioration is usually 99 times out of 100 followed by expansion. So when we start to kind of get the breadth gurus starting to get really bearish, that's when I start to look at things from a bullish perspective. And again, if you go and have a look at my X timeline, you'll see exactly what I mean. But for sure, I think if there is a further breakout in the S&P 500, again, shorter term time frame has obviously upside targets. But coming into the month of February, I think in a professional sense, I don't think there's a lot of high expectations coming into February, just generally every single year. This is a seasonality chart for the S&P 500, which is, to kick the year off, we are almost up 4% for January. But as we can see, for February, it's a very, very lukewarm environment. That doesn't mean that the market's going to just be really sloppy. It doesn't mean that the market can't provide us returns for individual stocks. My own general approach is to really just treat each chart on its individual merits. I try not to get caught up in the individual guessing game of the major indexes, because I think that can cause a lot of paralysis. But generally speaking, February isn't terribly productive. But again, just to reiterate, it doesn't mean that stocks can't go up. It's not just the S&P 500. We're seeing the same thing with the Russell 3000, which again was part of my thinking for buying the dip. Very, very clear support levels in place a few weeks ago, and ultimately we have rebounded very, very well from these levels, and we are very, very close to breaking out to new all-time highs. So it's not just a basket of 500 stocks. We've got the Russell 3000, which I think just gives us a better, broader scope of what's actually going on in the market. We've got the triple Qs. Again, I alluded to it just a few minutes ago. We had the shenanigans last week with the DeepSeek, but it does look like there's a lot of rebounds taking place, especially in software, which has just been on an absolute tear this week. But again, with markets breaking out to new all-time highs, I personally find it very, very difficult to have any kind of bearish outlook. Of course, I would revisit that thesis if we started to deal with, high volume failed breakouts, I should say. But for the moment, if the market is going to break out to new all-time highs on the back of solid earnings across the board, again, just to reiterate, for me, in my work, my clients, it's very, very difficult to have any kind of meaningful bearish outlook in that environment. Price, for me, is always king. We've got the Dow Jones Industrial Average, again, very, very close to breaking out to new all-time highs. Solid rebounds from logical levels over the last couple of weeks. Very, very happy. The other thing to say is over the next couple of weeks, the charts that I've presented might not break out. We could potentially remain range bound, but again, in that environment, it doesn't mean individual stocks aren't going to keep trending. So like I said at the start, it's really just all about just treating each chart on its individual merits. The Russell 2000 has even caught a bid to kick the year off, which I think a lot of us are really happy about. I said at the start that I would get into why. For those of you, again, that are maybe in the process of learning about markets, etc., at the moment there's a very clear inverse correlation with rates in the 10-year note. Obviously the bond market is something that we have to pay attention to, but the 10-year note has been falling away from logical levels. It does look like it is a bit of a base that's been building over the last few years, but for the moment we are seeing rates fall away a little bit, so naturally the Russell 2000 has caught a little bit of a bid in that environment. I'm also looking very, very closely at the VIX and credit spreads, etc. We haven't really had any kind of massive spike in credit spreads to give me any massive fear about the VIX. We have been dealing with little spikes here and there, but again, nothing massively concerning over the last couple of weeks. It's really just been in an environment where, again, many of you will have seen this chart many times. For me, a very basic colour-coded chart which might help some of you out there. If the VIX is trading under 20, generally speaking, that's in an environment where you want to be buying stocks. Bat singles above 20, certainly above 30, just hell no, just stand and watch. But then again, for those of you that, again, follow me closely, back in the 5th of August, I made a massive call on capitulation in the market on the spike above 50. Lo and behold, it turned out to be the exact bottom in the market. So generally speaking, when the VIX is in the 15s, I'm looking at bullish positioning. I don't think you can really see it any other way, but that's obviously my views. We all have different approaches. And gold, again, we're seeing potentially gold making new closing monthly all-time highs. The longer term chart for me, again, hasn't changed. I am still looking at levels up around 3,200. I think the levels there for gold make a lot of sense. Recently we've started to see some of the gold miners start to make a little bit of a move. Silver, again, is another chart that I get requested a lot, and certainly from our chart book it potentially is a catch-up trade there, but for the moment still got to remain bullish on gold, and 3,200 will be the next level of interest for me. Now, I said at the start that I would be walking through around 20 individual stock ideas for you this month. Just quickly before I get into those stocks, please do hit the like button, subscribe, share on social media, share with your friends, family, colleagues, etc. It all helps to get my work out there. But yeah, there's a lot of interesting charts, I think, to kick the year off, and I think one of the most interesting for me at the moment is Hims and Hers. Now, just to maybe explain why this is on the radar for me, this has been one of our client charts over the last few months, and it's working really well. But I just want to draw your attention to some of the fundamentals that I pay attention to, and the short interest on Hims and Hers is absolutely astronomical, and it does look like it's breaking out of a massive cup and handle pattern dating back to February 2021. There's solid 12 months earnings growth. I think the PE ratio for a growth company, telehealth, whatever you want to call it, is pretty reasonable. There's earnings coming up on the 14th of February now. As everybody knows, none of us have a crystal ball with earnings, especially the market reaction. So I do advocate having at least 10% profit in place in order to hold through earnings. I think with a stock like Hims, maybe you want to up that to 15-20% just because of the implied move that you might have. But for me, it's very difficult to have a bearish outlook on a chart that looks like this with this kind of short interest. Again, for those of you that follow me closely, Palantir last year had a very similar look. This has been one of our best ideas of the last 12 months, as I'm sure for many of you watching. I'm sure many of you have a position in it as well. I don't think any of us expected $185 billion market cap. We do have earnings coming up on Monday after the market close, so again I don't have any clue what the market reaction will be there, but if there is a favourable flat reaction to it and it does break out, then for me potentially another 30% upside, and then obviously if that target gets met then I'll reassess things, but potentially it does look like it's kind of basing and looking ready to hopefully break out again on the back of positive earnings. But like I said a moment ago, I've got no clue what the earnings will look like. None of us do. We all have our opinions, but we'll just need to see what the market chucks at us. Another chart I'd really like the look of at the moment is Block Inc. Now, Block has been one of our best ideas of the last few months. There has been a little bit of shenanigans here at the breakout levels, but what I really like about these kind of charts is that you kind of get that failed breakout, so there's a little shakeout and then you get the actual breakout. So Block Inc, for me, that's a bullish chart pattern dating back to the summer of 2022, and could get quite exciting, quite interesting, especially if it can get above the $100 round number level, which is massive for most stocks. Again, Robinhood has been another solid, one of our best ideas of the last 6 months, continues its uptrend. Obviously earnings is going to have a massive implied move, so I would always suggest planning ahead for that, but our targets here remain previous all-time highs, up around $85, $86. Obviously earnings will dictate, but please note there is a very strong correlation with Robinhood and Bitcoin, if you're not familiar with that. So you do need to have quite a strong stomach for volatility, especially with new positions. Qualcomm, again, looks like it's been beaten up a little bit, I think, over the last few months, certainly since last summer. It's just been doing nothing. But for me, I like buy low, sell high opportunities. I'm not one of these analysts that's always looking for all-time high breakouts and breakout scans and all that stuff. I'm very much about trying to find really good companies at lower prices. I think Qualcomm, potentially a double bottom chart pattern above 180, might make some sense for many of you. Now, one of the charts that I just wanted to quickly go through is Nvidia. I tend to talk about Nvidia most months just because I know that many of you will either have a position, or if there is a buy the dip opportunity like I think there is at the moment, then I certainly want to just provide some context and my chart on it. And obviously, like I said, the shenanigans last week with DeepSeek, massive overnight mini crash, down I think 17-18%. There's been a little bit of a rebound. So the two buy points that I have, if we're strictly using technical analysis here, for us it was a buy last year down at 100. If there's another opportunity to buy it at 100 again, I'd love it, just to be perfectly upfront with everybody on it. I probably lean to not getting as low as that. So I think from a technical perspective, if it gets back up above 135, this is a 15% range that we're looking at there. Then obviously if all-time high breakouts is another conversation. But the two technical entry points for me are $100 and above 135. Buying here, it's very, very difficult to say exactly where it's going to go. I probably lean more towards a 135 entry than a 100 entry. So I think certainly, add it to your watch lists for next month and see what the market does. Google coming up, earnings next week. Obviously the AI shenanigans again. Looks like Google is making new all-time highs. So we'll see what happens, I think, with earnings next week. Again, just to reiterate, this has been a buy low opportunity over the last 6 months, and it continues to work its way higher. The upside targets that we have here are up at 260, but again, it's going to come down to what we get with earnings in a couple of weeks. Coinbase, again, it does look like this little shakeout here has taken out a few folks prematurely, and the target that we have here is up around 350. It's more of a swing trading type of chart. It's not a chart that's trending meaningfully for any long period of time. Obviously, I think a lot of folks see the kind of longer term fundamentals, etc. For me, it's currently a swing trading type of chart, so certainly above 280. The chart for me would be a 350-ish target. Apple, obviously we've had earnings in the last 24 hours with Apple. The market, for whatever reason, decided that the earnings were okay. I don't think there's a lot of fundamental folks that see it the same way, but really it's obviously the market is telling us what it's doing here. So yeah, I think you obviously still have to be bullish on Apple. I don't see any kind of massively bearish case at the moment. Certainly if this sell-off maybe continues next week and we start to undercut these recent lows, then you're going to get an opportunity to buy it a lot lower, or a bit lower I should say, not a lot lower. But at the moment I'm viewing this as a little shakeout and logical targets there, if I'm using Fibonacci, which I am, up around 278. C Limited, again, potentially this is a longer term view. The previous all-time highs, like I said, like this says in the chart, you're probably going to have to deal with a mini correction or a corrective phase at some point in order to get up here, but it has been trending beautifully off its lows. A little shakeout obviously back in August, like the rest of the market did, but since then this is a base that's been building over the last few months and potentially could be breaking out again. Now we've got Adobe again. I like these little shakeouts. It's more of a buy low, sell high, swing trading style of chart. Like I said, I do like these little shakeouts. Obviously it's a massive mega cap tech name, nearly $200 billion worth of market cap. So yeah, potentially a little shakeout there for Adobe. Meta just continues to rip higher. Someone reached out to me on X during the week just asking me if I had any upside targets for Meta. The target for me is the same target that it's always been, up around 860. I don't see any reason to kind of reassess that. It's been a massive performer, multiple buy points for our clients over the last few years. And yeah, up around 860, it makes a lot of sense. Same with Netflix. My views on Netflix at the moment, we've just met upside targets. I think $1,000 round number just makes a lot of sense. But I think what we're probably going to see with Netflix, obviously we're up at $400 billion worth of market cap, big earnings growth, but it is an expensive stock now, and I'd be hugely surprised if we didn't see a stock split perhaps over the next few months, maybe 10-to-1 stock split. I think it makes a lot of sense now. I think most of you watching this will probably be in agreement. But I think if it can break out and put in another breakout above $1,000, then there's obviously massive upside potential there going in for the rest of the year. But just for clarity, we have met our upside targets here now in Netflix, and it's really just a case of waiting to see what the market does for us next. Tesla's always a controversial one. Not a month goes by where I don't get nasty email or message on social media. But it looks like we're probably going to go out at a new closing monthly all-time highs. Now, we missed delivery numbers, I think it was last month. We've just had earnings, and still Tesla looks like it's potentially going out at new closing monthly all-time highs. So again, very difficult to have a bearish outlook on Tesla. I know Elon's a very controversial fellow, but at the moment the Tesla share price is doing what Tesla hope it would do. It's going up. A lot of retail investors are obviously hugely into it, and yeah, I think if there's a confirmed breakout here, maybe above 420, then you might just see some more momentum pile in. And same with Amazon, potentially breaking out. The longer term chart for us hasn't changed. I am using Fibonacci extension levels for this chart because history tells me that these levels matter. So we have broken out above the next Fibonacci level. So for me, it's very, very easy from a risk management perspective now. Our clients very, very well aware, above 220, remain bullish, lofty upside targets. It's not going to be easy getting up there. This is likely, with a stock like Amazon, this is a 12-month challenge to get up there, but certainly it is breaking out, and I think you just have to remain bullish on Amazon. Now, Spotify have earnings coming up next week. Obviously, I have no idea what the reaction will be to earnings, but it has been trending beautifully. The 10-month moving average has been a really good risk management guide for us. Our target here remains up around 585. But I think going into earnings, if you're out there holding, I don't think there's anything wrong with maybe taking something off the table. But we're all different. We've all got our different approaches. For me, I also look at it from another perspective, and Spotify is only a $100 billion market cap. So if they do report blowout earnings, we could still potentially start moving higher again. We've got Royal Caribbean. Again, we're working with our next target here up around 350. It's been working unbelievably well and continues to perform very, very well. But certainly up here, potentially a little bit of a pullback makes a bit of sense, but longer term structural trend remains in place for us, and we're working with 350 as our next target. Shopify is, again, looking very, very interesting to me personally going into the next few weeks. For me, it's been basing for the last 2-3 months, and if it can break out above this kind of 120, 123 level, then I think there's potential for it to get back to previous all-time highs. This is the chart that our clients are working with at the moment. I think 50% upside, but it does need to kind of put in that confirmed breakout. And I am using Fibonacci levels again. This is a longer term chart because I can see from the Fibonacci levels that the Fibonacci levels 1000% matter for this chart. So further breakout, got big upside targets. Deering Company looks like it's potentially breaking out. I did talk about it a few minutes ago about what I really like about little shakeouts before actual breakouts. Looks like we're potentially getting that with Deering Company. This is a massive base that's been building over the last 3 years. We do have earnings coming up on the 13th of February, so that's something to be very, very mindful of. But I think you can remain bullish above these levels here around 420. SoFi, again, we've had earnings on SoFi now. Just from my dumb person perspective, I'm the first to admit that I'm not the greatest fundamental analyst on the planet. But from the conversations that I've certainly had and my own views, the earnings for SoFi looked pretty decent. So I'm actually looking at this. It's been one of our buys from 850. But I am looking at this personally as a potential buy the dip candidate. So I think if it can get back up above 17 or indeed even pull back to this $14 level again, then potentially that could be the two technical entry points, I think, for SoFi. It's obviously a company that I know most of us will see the longer term prospects. There's still a 12% short interest. So if this does do an about turn, on the back of its earnings last week, don't be surprised if there's a little mini squeeze on the shorts in SoFi in the near future. NU Holdings, again, tradable bottom. One of our charts last weekend actually is doing really, really, really well. The target here that we're working with here is up around 16, maybe in that kind of 1550, 16 zone. More of a swing trading type of chart, but it is working out pretty well. and we have earnings coming up on the 20th of February. Again, Uber earnings next week, so need to kind of be on guard for that. Probably one to consider post earnings, but again, it looks like a potential tradable bottom there. But like I said, I very much advocate just having an assessment of the earnings reaction and making a decision if you are looking at Uber at the moment. eBay potentially basing to break out. I think there's potentially another 20% upside there if it can get back to previous all-time highs. One of our best ideas again over the last few months has been Cloudflare. We had earnings last quarter which offered an unbelievable opportunity. I've obviously posted the earnings on the chart for our clients, but it just continues to motor and move through the levels. Again, I've been using the 10 week moving average just as a basic risk management guide, but now it has broken out to above key levels, and now rather than use the 10-week moving average, I think it makes a lot of sense to just kind of use this and hope that any pullback here, this new level will act as support. But Cloudflare has been working out very, very well, and we'll finish it up with Lululemon, which is potentially breaking out, and again it's been working out very, very well over the last few months, and I think there is potentially another 15% upside there for you as well. But if you are still here and you are wondering who it is and what it is I do, there's a link in the description. Feel free to jump onto our website at honeystocks.com. All of our transparent time-stamped work, it's all laid out. I only use my own charts and data. But what we do at honeystocks.com is we provide memberships to all of our premium work, which includes access to all of our premium weekend analysis every single weekend with all of our best charts, and of course our weekend hot list, all of our highest conviction investment ideas. I'll show you what that looks like in just a little second, and also access to our midweek report, which is a little 5-minute video update on the market. We also provide access to a wonderful, highly intelligent community of professionals, investors and traders from all across the world. Provide access to our chart books, which cover all of the most liquid stocks, ETFs and commodities. And if you are new to technical analysis, I also provide access to our complete technical analysis program, which, as I'm told, is a very, very good, solid grounding for those of you that are looking to potentially utilize technical analysis and learn a little bit more about it. But just to show you what our high conviction investment ideas look like, this is a recent alert that went out for Snowflake, which is still currently running. Again, it's been working out very, very well. Block, I think I touched on that a few minutes ago. Big gainer. Nvidia, big gainer. Spotify's been an absolute monster. Dell, which is a decent little winner. But I am very, very unique in what I do. I publish on our website, I timestamp all of our highest conviction and ideas for full and complete transparency, so you can jump onto our website, see the stocks that I've recommended over the last 6-7 years, and make sure that the types of stocks that I'm recommending are the types of stocks that you like to buy. I've done this every single year since I started. Don't know anybody else that does it, but please do feel free to go on there, scrutinise it, and like I said, make sure that the types of ideas that I put out and the types of names are similar to the names that you like to buy. I'm not putting out there any pump and dumps or low quality stocks or penny stocks, etc. It's all stocks that have really good solid numbers behind them. But I think my work generally is a good fit if you are someone who has a mid-term approach. I think if you're someone who's constantly losing at day trading, maybe you're too busy, work, life, family, business, maybe you just want to be part of a really successful community, or you're just sick of hunting around social media for ideas and you'd like to have access to a professional analyst every day, again, feel free to jump onto our website. I've got a welcome tour which I've posted onto the website so you can see what my community looks like before you go signing up for anything. So highly encourage you to do that. But yeah, if you are out there and you've stuck here to the bitter end, thank you very much for watching, and I hope to welcome you soon. Thank you very much.